To welcome my panelists here. The topic before us today is driving financial inclusion in Nigeria through e-payments. We all know that this particular topic is a notable issue in Nigerian financial system today. Evidence suggests that we have close to about 64% of Nigerians that are adults. And we have a greater percentage of these people that are currently excluded from banking system or financial system. We know in this country today that a very significant proportion of financial transactions are handled through cash. We all know that our fathers and mothers back in the village enjoy keeping their money under their pillows. And each time you mention to them that they should take their money to the bank, they grow pimples. And as such, it's our responsibility as enlightened Nigeria to start pushing the gospel of bringing people into the financial world. And it's not even trying to make them start doing banking business alone. It is our responsibility to start encouraging them to begin to embrace technology in financial transactions. And technology in financial transactions today, as we all know, is evolving through various means. We've heard of mobile banking, we've heard of electronic payments. We all have cards in our wallets. We all do most of our transactions today through the internet. And so today we are going to be leveraging on that. And I have erudite scholars here who are going to be discussing that topic. Very importantly, the speaker of today, Jay, as a matter of fact, let me just quickly say here that I will be very informal in this exercise. I want to be calling my panelists their first name instead of Mr. Soso or whatever. And so that we can blend easily. Jay is going to be speaking on the topic before us. And I've read his profile. He's no less a very competent person to handle this topic today. And without much ado, I'm going to be calling on Jay to give us his presentation today. Jay, thank you.
Sorry, which mic am I on? This or this? Anyone okay? Good morning, all. My name is Jay Alabraba. I'm here as, I guess, the private sector representative. Specifically, I'm a co-founder of Pagatech Limited, which is a mobile payments licensee of the central bank. But I also play a second hat as an executive member of AMPO, which is the Association of Licensed Mobile Payments Operators. I have to say thank you as well, first of all, for the very warm welcome I received. I'm not a member of the institute, but I was a banker at investment bank in my former life, so I appreciate the warm welcome I received when I came here. I'll also say all protocols observed. I apologize, I don't know what the hierarchy is here that I have to deal with. So I'm going to be presenting a paper titled Driving Financial Inclusion Objective in Nigeria Through E-Payments. I've been given about 20 minutes for this. I have about 20 slides. I'm not going to be reading the slides, but I'll just use it as a backdrop for the conversation we're going to have. What I'm going to try to do during this 20 minutes is, first of all, just restate the problem that our chairman has already made. I have some basic statistics that Defina has helped us provide. I'll highlight the major core issues that exist with the default way that we're approaching achieving financial inclusion in the country. I'll talk about four key changes that are happening in the country that we should pay attention to because they're actually pointing us in the direction of what the right approach and the right solution should be. And then I'll also, along the way, be making some basic predictions. Some you may agree with, some you may not, but I hope it will be further for debate by the panel, and then I'll attempt to close the panel. Before I start, I'd also like to give credit to two very important people whose ideas I have sort of factored into this presentation. Rotimi Olanio, who's marketing executive in the country, and also my partner, now our CEO at Paga, Tayo Yosu. Do we have the slides up? Do you have my slides? I'm sorry? Well, the slides are quite important, actually. Do I give them to you? I have it on my laptop. I have to get it off my laptop. Apologies. Okay, those are the slides. Okay. Sorry about that. Okay, we actually changed the title, but this title still applies. Is the clicker working? Where do I go here? Yes. How do I transition?
Hello, guys.
Or someone could just transition when I ask. All right. Apologies again for that. So, as I mentioned, the title of the paper is actually Driving Financial Inclusion Objective in Nigeria Through E-Payments. Can we go to the next slide? So just to set the backdrop, I'm going to present okay, back in front, thank you. I'm going to present one potential definition of financial inclusion with a statement that for society to be successful, money must easily moved over distance or over time. And this speaks to the two key aspects of what financial inclusion is about, or even basically a strong monetary system in a country is about. Efficient payment systems and then easy access to financial services. As far as efficient payment systems, we're talking about cases where a person needs to move value or move money from one party to another, potentially from one location to another. This is what I mean by moving money over a distance. This could be businesses, they could be individuals, they could be banked or they may be unbanked. There's a need for money to be paid for goods and services, and people have a desire to also accept this money for goods and services. Also very key, another leg to this financial system of financial inclusion has to do with easy access to financial services. And this is what I describe as moving money over time. You talk about savings accounts, we talk about credit, as in loans, you talk about insurance. It's a case where you do something today, maybe make a payment today or pay for your insurance today, and then tomorrow you're either repaying your loan or receiving a benefit from the insurance, etc. These are all mechanisms that must be in place for truly robust society to develop with the right risk mitigation factors in place. And in both cases, obviously, cost is a major factor and convenience is important to the individuals involved. I want to put Nigeria in context very briefly. 160 million people in the country with a very, very young population, as our chairman has already stated. 54% of Nigerians, at least as of the 2012 data we have, are adults. And even amongst that group, more than 50%, about 50% are below 33 years of age. So it's a very young population. Largest GDP in Africa, the largest economy in Africa. And all these statistics sort of point to, a country that is very vibrant, strong economically, which Nigeria is. But when you look at the informal sector and true access to finance, as in the common man at the bottom of the pyramid, what they have access to, there's an issue. EFINA, which is an organization I'm sure most of you are familiar with, has done fantastic research in this area. They're very supportive of financial inclusion goals of the country. An organization that we at PAGA sort of respect very, very significantly. The statistics from 2012 tell us that 67.5% of the Nigerian population does not have access to traditional banking. The obvious reasons have to do with lack of infrastructure, difficulty in presenting proper return on investment for setting up rural engagement points as far as the banks go. These are all issues that I'm sure you're familiar with. And frankly, we've continued as a country, despite the fact that the traditional systems don't exist, or the formal modern system, so to speak, don't exist. People find ways to move money from one place to another. People find ways to save. These means are typically quite unsafe, very high risk, and also costly if you actually look at it as a percentage of the kind of returns that it gets. The current approach is really not working. There is a need for us to be thinking about new ways of doing business in banking. The approach of, one way to solve the problem obviously would be that we go and build bank branches in every village in Nigeria and sort of come up with the cheapest set of products that customers would be interested in and give them the highest rate of return. But obviously, because we're profit-seeking entities, this will not be a reasonable thing to do. We have to consider other ways of achieving our goals. The cost will be too high to continue to build infrastructure in this way. The pictures here just show, and I think it shows extreme cases of very long lines in banks. But there are other reasons why you find that people that we're looking to financially include may not be interested in going to banks, which we don't need to delve into today. But with that backdrop of sort of the problem that we have existing in the country as far as financial inclusion goes, it's also important to talk about 4 key changes that we have observed that are happening in the country today. And as I said before, these changes, these evolutions, are sort of leading us towards a potential solution that seems like the right solution for doing the things that we need to achieve. The first has to do with technology, right? You talk about connectedness and mobility is changing, is evolving. Technology is making new things happen, and I'll talk a little bit about that. The Nigerian consumer is changing as well. Their needs and their expectations are evolving, and we need to be conscious of it. If not, we will miss the boat in how we deal with them. The retail landscape in the country, this has to do with where people go to access their goods and services, is also changing. And financial services itself is changing. The people in the room better than I would even be able to speak to this. We need to be aware of these 4 changes that are happening. And I'll talk briefly about each of them. Africa in 2000. Does anybody know what this device is? So I had laughter in the room, so I'm certain people here know, but you'll be quite surprised. There are some rooms you go into of people that are old enough to sit and listen and talk to you, that they don't, maybe they recognize it from the movies or something, but if you ask them, drill down exactly how is this thing used, you'll be surprised that people don't really have an idea. But this is Africa in 2000. Before the advent of GSM in 2001, phone penetration in Nigeria specifically was very, very low. It was a major ordeal to actually get a line, and even when you got a line, it was a constant battle to keep this line, right? Many of us still have our phone numbers, but there's no phone to speak of. And then GSM came with MTN, who started as a spark, and it has grown to this raging fire that has changed the way we do business in Nigeria and across Africa, in fact. But prior to that time, things were quite dire. Fast forward to, I'll use 2013 statistics because that's the latest that we have, and you talk about mobility, mobile phone penetration and mobility and connectedness, and the picture is amazing. People that have heard the story about how, for example, MTN came and the kind of statistics they used to evaluate, the Nigerian business opportunity. I think within the first several months, maybe even the first year, they more than quadrupled or multiplied it as far as what was possible. But today, 735 million plus subscribers across Africa. In Nigeria alone, 75 million mobile phone subscribers, which is a very, very significant number. And these are people, when you talk about subscribers, people that are connected in some way. So at minimum, they have a device that allows them to send and receive SMS messages and make voice calls. Talk less of some that have smartphones or maybe even smarter devices that allow them to do more intelligent things with their phones. Put it even in further context. We have 11.2 million square kilometers, which is the size of USA and Argentina put together, is the area that is covered by mobile phone coverage. And these are 2008 statistics as well. So at that time, 60% of Africa, 60% of the African population was covered with mobile phone coverage. So the picture is quite different today, and the fact of this connectivity and access tells us that there's a real opportunity to deal with. But I don't want us to get carried away with this concept of a mobile phone, right? Despite the fact that, for example, my company, Paga, is referred to as a mobile payments company, it's really not just about the cell phone, it's about connected device, right? The line continues to get very blurry. If you look around the room, a lot of people with iPads, a lot of people with, what they call Samsung Notes, and these are devices on which you can actually get phone access, but they're not designed as phones. Phone is just one of the features that many other things happen. In this slide, you see the basic handset, one at the bottom, where minimum you can do obviously is voice, SMS, USSD, and then you go along the spectrum all the way up to the wearables. Apple recently announced the Apple Watch, I think Apple Watch, which is a device that you can do virtually anything you need to do it. And more of these things will come. So I just want to highlight the fact that it's not simply about the cell phone, it's about connectedness and mobility. When you talk about mobile, you should really be thinking about any device that allows people to connect. And in fact, in Nigeria, we're already seeing that people are happy to connect with multiple devices. Here we'll be standing around with our cell phones, and then we get to our offices and we bring in our laptops or whatever else to interact with. This leads me to my first maybe statement. I was going to call it prediction, but it's actually a statement of fact that mobile, again, any connected device, is to Africa as computing was to the Western world, right? I mean, we have already demonstrated that we have the ability to leapfrog certain technologies, and we're going to get to a certain place faster. So remote connectivity, ability to remotely connect to whatever service that we're interested in will drive the future of retail banking is one of the things we believe in. And this has to just do with that first major change that's going on around connectivity, technology, etc. We're also dealing with a situation, as I said, where the Nigerian consumer is changing. Nigerian consumer is getting a lot busier, they don't really have time to waste, and they have a lot to do, especially when you start to think about people walking around their smartphones, etc. They're doing a lot all the time. They want their services to be much more convenient, they want it to be much easier accessible. People don't want to go a long distance or wait in a long line to access what they want. Shopping for them as well is a very interesting idea. Shopping has started to become entertainment. You see the development of a lot of shopping plazas, a lot of malls. People actually see that as entertainment. There's even the advent of online shopping as well, with the Konga and Jumia type companies that are coming into the system. And you're also seeing where the mobile phone becomes probably the most intimate relationship a person has. I dare any of you to go the next 6 hours without touching your phone, for example. I think there's some kind of anxiety that all of us suffer when that kind of thing happens. And at the same time, people are getting a lot more comfortable doing things electronically. Mobile banking, as delivered by your companies, is very much there. And even mobile payments for people that don't even have bank accounts, people are a lot more happy or comfortable moving down in this way. So the Nigerian consumer is changing as part of this, drive that we're seeing in the business. The retail landscape as well in Nigeria is changing. As the big retail chains come in, You see a lot of the South African organizations coming in, PEP, SPA, KFC, even within Nigeria, a lot of interesting chains that were playing up. And the mom and pop shops, as we would call them, are getting a lot of stiffer competition. And they have the need what you have on your shelf. It's really a lot more about what problems you can solve. People want to go to one place and get as much as they can done, right? Which is the story behind shopping plazas and malls. So you want to drive to one place park, and you can go from door to door and achieve a lot more. So the retailer themselves is realizing that we need to do more to give our customers incentive to come inside and actually stay and actually come repeat to us. This changing retail landscape and the need to do more is going to be one of the major drivers that leads us to what is potentially the way forward to sort of drive further financial inclusion. And the fourth major change that I wanted to highlight has to do with financial services. The financial services landscape itself is changing today, and there's heightened competition amongst the players. When we talk financial services, we're not just seeing banks, we're talking insurance companies, microfinance banks as well. Any entity that may be playing in that space. There is strong competition. The need to have great relationship with your customers is definitely there, and people have a desire to make that happen. Along those lines as well, the mobile phone and computer are rapidly becoming the access point of choice for people. This is something that's happening very clearly. So all these point to what I want to present potentially as a way forward. And I would say potentially, even though I think for large part of the market, we've come to the conclusion that this is the way forward. It is that the banking hall of the future will be that retail outlet, that provision store that's around the corner from your house, will be that agent outlet. That is where the customer will go to and say, this is my banking hall. This is the person that knows them well because they're from that community. It's someone that they trust. They can ask the questions, the silly questions, they can ask the difficult issues, and the person can actually break it down in their language and better understand what's important to them. So many benefits to the customer. It's a one-stop shop, solves a lot of problems that they have. They're just going down the road from their house to a place where they already go to buy Omo or Gary or something to get the banking service that they want. The agents can speak their language and break things down for them. And frankly, because of the reduced infrastructure costs and training costs, potentially we will always be seeing lower cost rollout for office products and services, which allows us to give more value to the customer down the road. Benefits to the banks are also clear. Lower infrastructure costs, ability to reach more customers cheaply, and therefore also mobilize funds even more cheaply. These pictures here are actually real-life Paga agents around the country. As you can see, there's the representation of pharmacies, little business centers, and the third one bottom there is sort of a phone seller in somewhere in Lagos. Before I continue, I also want to just highlight the role that the central bank has played in making this happen. The CBN has laid a very, very strong foundation for what we're able to achieve here. I would actually just ask that we give a very brief round of applause. With the three particular levels I just want to highlight, the CBN has sort of made it very clear the direction that we need to go to achieve financial inclusion in this sense. The bank-led mobile payments framework is one thing. This has been around since for several years now anyway, and even more recently, the central bank government invited mobile payment operators as well as the CEOs of all the telecom companies to iterate certain aspects of the mobile payments framework. Specifically that the telecom companies are excluded from being licensed for mobile payments. That actually encouraged us in certain terms to actually work together, which is something that's happening today, and so we're very proud of that. Today there are 23 licensed players, both banks and non-banks, in the country, and we're making good progress, even though not very visibly, but you see that there's really great progress being made with several players. The agent banking framework is something that also was released. I think the first draft or the first version was released last year. And this basically talks about presenting opportunity for financial institutions to actually begin branchless banking, right? Banks and financial institutions are able to offer their services, outside of branches, but with certain policies and protocols kept in place. The central bank as well, and I'm sure we'll hear more about it as we go forward this year, is going to be allowing third parties also participate in developing agent networks for this. And the last one I want to highlight as a CBN benefit that was brought in here is this thing around interoperability and the shared agent network. The central Frank is very, very clear about these 2 points. They want all the systems, all the schemes to be able to interrelate and connect, so people can send value from one to another, and actually even share our agent networks, which we'll talk about a little bit more, I'm sure, as part of this panel. Building out agent networks is not cheap, and frankly, when you go to certain locations, multiple parties are dealing with the same retailer to sort of have their media agents. So the concept of sharing is very, very important. I think we're doing a lot better job in general in Nigeria working together to make this happen. So there's a lot of work that has been done, a lot of progress that has been made, but we have a long way to go. Change does take time, but all the pointers and all the evolutions lead us to conclude that definitely the future of cash is definitely going to be electronic, if not even mobile, electronic. On this slide, I attempt to sort of present a timeline of how money has evolved, and you go as far back as 500 BC, when metal objects were first introduced as money. 1977, the first smart card was invented. Euro notes and coins circulated in 2002. 2008, Bitcoin, which I'm sure we'll soon start talking more about in Nigeria. Bitcoins were invented. Our company in 2009-2010, Paga, was established, and there's a prediction here. My partner believes by 2060, physical notes and coins will be eliminated completely. I think it's going to be about 2059 that's going to be eliminated. But the prediction here basically is that Africa will get there first. This goes back to this point about how mobile is to Africa, what computing was to the Western world. And we have this ability to leapfrog technologies, and we have a very strong need to actually achieve this because the population is there and the business need is there. It's very likely that we will drive this e-payment much faster than any other part of the world and get there first. If you indulge me, I'll just take a few minutes to talk a little bit about Paga, sort of to address certain points that we're making. So Paga Tech Limited, which is the company that I work at, is a financial institution, and we're working with partners to achieve 2 things, which I'll say are very tied to the first slide that I presented. One is delivery of efficient payment systems to all Nigerians, be they banked or unbanked, which means that on one hand, we're working with our partners are going to be banks. We will be delivering products of banks through our channels and through the Paga system. But we also have things that are directed at people that don't even have a concept of what traditional banking is, and we brought into the financial fold, but in a very subtle way that keeps them comfortable. And secondly, another leg that we focus on is low-cost financial services to the mass market. And this is low-cost and high-quality financial services. We want to keep it simple. CBN has done a great job around KYC and allowing people come into the formal financial fold, and we want to play a role in doing that. That's what Paga is focused on. Today, we offer consumers 5 products across 6 channels. We have a money transfer product, which includes moving money into bank accounts. We do airtime. We do bill payments, basically instant payments that are received, and in most cases, instantly activated for whatever it is you're paying. We do merchant payments, which allow retail players accept value from their customers. And we also have launched in Lagos and Kano so far a product called Paga Savings, which we're doing in partnership with certain financial institutions. Paga is not a deposit-taking institution, so what we have is sort of the customer relationship, and we provide the technology to support it, and then we work with the institution to make sure the customer experience is fantastic. So we haven't stopped there. In our branches financial services arm of our innovation team, we're looking to do a lot more in insurance, of course, in loans, and we're actually seeking to continue to partner with organizations like yours to make this happen. So there's more to come. As far as channels, we're currently across 6 channels. Basically, there's no electronic means that you talk about on a mobile phone, or let's even say like a tablet or a laptop, that we don't make available to the customers. Obviously, through this time, we've actually seen there's certain preferences that people push for. And this is all great learning, and there's actually no way to learn this unless you do it in a country like Nigeria. So we feel that we've actually made great progress in this area. In 2013, we grew 191% in users, and we have a fairly consistent rate of active users on the Paga platform, which is quite encouraging as well. Today, I think we're at about 1.8, close to 2 million users on the Paga platform, and this speaks to the fact that there's a really strong need for the kind of services that an electronic platform like ours will provide. And also, it also speaks to the opportunity there are many people. If we're talking 2 million users, even with organizations like First Bank that have large customer base and are very active in mobile payments as well, First Money, you find that when you combine all these, we still haven't even scratched the surface of what the potential for the market is. So there's a lot more work that we can do, and a lot of opportunity that we can drive to. Paga also has an agent network today that is about 6,500 agents across 32 states. Approximately 18% of our agents are in locations that are deemed rural or semi-urban, right? And 18% is a large number when you consider the fact that we may argue that there's no great business to pursue rural locations, but we have a lot more work to do there, because when you talk about financial inclusion, the most disadvantaged or the most excluded people are in these places, so we definitely need to grow there. In rural, what we find is a lot of disbursement scenarios, so organizations, be they public sector, NGO, or private sector, often will be disbursing funds to these rural places, and the customers use Paga agents, for example, to receive the value. Last year, we actually announced an aspect of our business where we want to be available to play a role because of our deep expertise in agent network development and management. We want to play a role with banks and other institutions to support in not only opening our agent network for use by the organizations, but also where you seek to sort of build your own bespoke networks, we can actually play that role because we have the in-house capability to do it. So I'm open to having those conversations after my talk as well. Today, about 1,800 businesses use Paga in one way or another, either to disburse value to their customers or to their staff, or simply just to collect money from their customers. There are other things that we do for clients that may not be visible to the public, but also on that payments. So things are happening, things are growing, and we're learning every day. There's absolutely no doubt that this is not the kind of thing that any entity can do on their own. So we don't claim to have all the answers. I think we've just been very fortunate that organizations like banks and even the central bank has been willing to talk with us, and we've worked together to come up with solutions that make sense for the market. We're open to more of these collaborations, which is one of the key themes that I want to leave this conversation with, because nobody can actually do it alone. And I actually employ on the commercial banking side that a lot more collaboration be pushed to make it happen. We have a statement, which is the goal of the company, that by 2018 we will help, which means we'll be in partnership with several parties to do this, bring financial access to 40 million people and create 20,000 new jobs for Nigerians. And this is a statement around national development, the role that we seek to play in national development, but it also says about what payments can actually do to actually make Nigeria a stronger country. So let me conclude with a quick recap of the key points, the things that I hoped you would get out of this talk. First of all, there's a real problem. Almost 70% of the country is excluded from formal financial services, and we cannot keep things this way. This actually means that people are not in the formal economy. It actually means that we are limiting our potential growth, because the opportunity to exchange value, opportunity to transact from one party to another or across boundaries is limited. And this is actually hindering the growth of the country. So it's something that we must tackle as a real problem. We've also talked about how the current way of doing things, we cannot just simply do it bigger and larger and more expensively, because it will lead us into a hole. We need to think of alternate ways of achieving the goals that we want to achieve. I talked about 4 changes that are happening in the economy that sort of are pointing us to a potential solution, at least one solution that we should consider seriously to achieve the goals, which has to do with technology is changing. People are more connected and have access to communication technology, which is excellent. The consumer is changing, their needs and expectations are changing. The retail landscape is changing. There's a real need for retailers and sort of experience points for shopping to do more for the customer and help solve more problems. And this is something that's driving change in that area as well. And then fourthly, financial services, which is an area that we should all be concerned about, is changing as well, where the way we deliver the value and even the value being delivered has changed to a certain extent. All these pointed us to discussion around agent banking and the use of retail agents as the banking hall of the future, a way to deliver value to customers. And we talked about how the future of money is indeed cashless, the role that the CIBN has also played in driving this with cashless Nigeria and the various frameworks that they've delivered over this time. We can't do it alone, so And it's important that we think of collaboration as a way to achieve this. I think Nigeria, unfortunately, the default position in the early days of any business is a mutual suspicion. But over time, I think people will calm down and realize that, you know, when you're able to co-compete or work with your potential competitors, a lot of great things happen. So those are all my slides. I just want to, I'll leave with advice that we can think small when we think of this. I think one of the worst things that we can do to sort of achieve the goals that we've set for ourselves is take too slow an approach or too measured an approach in achieving what we need to achieve. I think certain risks must be taken in order to make this happen. This idea that you don't think small